Good afternoon, everybody, and welcome to our live panel for the reactions on the budget 2021. The Chancellor has just finished his announcements, and what a budget that was. I don't know about you, I was frantically writing notes. So we've got a lot to discuss, but let me introduce our panelists who are going to help to disseminate exactly what the Chancellor said and what is it going to mean for accountants and for your clients. So I'll give you each of you a chance to introduce yourself. So, Will, do you want to give yourself a little introduction?
Yes, thank you, Steve, and good afternoon, everybody. My name is Will Farnell. I'm founder of Farnell Clark. We're an accountancy firm based in Norwich in Norfolk. We look after a real mix of clients across a variety of sectors, limited companies, sole traders, private individuals. So really interested to share some of my thoughts on those initial reactions and hear what my fellow panelists make of some of the announcements we've just heard.
Brilliant. Thank you very much. And Jenny, over to you.
Hi, yes, hello everyone. My name's Jenny Schrudwick. I am the Senior Tax Product Manager at Iris, so I look after all our tax products. I've been at Iris for over 18 years in different departments, but always working within the tax environment. Prior to that, I was in practice for a few years, again within the tax department. So for me, yeah, the budget is always quite interesting. This one more so than any other I've watched. And yeah, there's lots and lots of stuff for us to sort of take on board and start thinking about.
Lots of changes to be made, right?
Yep.
And Paul, over to you.
Paul Aplin. I spent 40 years in general practice in the Southwest. Also chaired the ICAW tax faculty, and 2 years ago I was ICAW president. Still absolutely fascinated by tax and all that goes with it.
There's always a fascinating changes going on with tax. Right? It keeps us all busy and obviously in jobs as well. So the budget, wow, lots and lots that was announced. What was your kind of the key takeaways? Paul, obviously, we'll come to you first. What was the big thing that you came away from going, wow, okay, didn't realize he was going to announce that?
I guess I was expecting a lot of announcements to try to support the economy. If I can just give you a couple of statistics, I like statistics. Budget 2020. Just a year ago, just before COVID really hit, the public sector borrowing for the UK was forecast for 2021 to be 47.4 billion. We heard today it's actually going to turn out at 355 billion. For next year, only a year ago, we were forecasting 21-22 would be 54.8 billion. Today, we heard it's 234 billion. I think that just puts into context the kind of scale of problem that the Chancellor is struggling with. So I'm not surprised that we've seen more support for things like furlough, SEISS grant, the extension of the VAT reduction for hospitality. But I probably had expected more tax announcements.
True, and we'll come on to some of the tax rate changes at the moment that were announced, but also some of the things that we think we're missing, and we may see more of when publications go out on the 23rd of March. It's interesting you say about the borrowing, and the one thing I wrote down that the Chancellor mentioned was that the amount borrowed is more than the borrowings from both world wars. That kind of puts it into context, right? Just the sheer volume of borrowing that's going on. Will, how about you? What was one of the biggest takeaways for you?
I think for me it was actually the things that weren't mentioned, and I was keen just to, before we came on air, to just clarify the number of additional small businesses that are going to be able to access funding in the fourth and fifth self-employment scheme, and we said we think it's about 600,000. But we know that there's around 3 million that are still without any support. So even if we take that little bit off, there's still nearly 2.5 million small businesses that have such a positive impact on UK economy in terms of the taxes they pay, the people they employ. And I was really hopeful. We work with lots of small business limited company clients who have had no support for 12 months, or no real support comparative to the self-employed, non-incorporated and employees who have got access to furlough. So I just thought with everything that's gone across Treasury's desk that we might have seen some glimmer of hope there, and it's disappointing that we didn't. So more something that I had hoped to see but didn't see. That's kind of the big thing for me.
It's interesting, right? Because they made the announcements about the support grants and things like that. Like you said, it only covers a certain proportion. Obviously, some of the other things that they've done around the Help to Grow scheme that they've announced, it all requires funding, and it all requires a business to go and put money into it to go and then get kind of either tax relief or to be able to get discounts on it. So it's almost kind of pay your way in some regards to get some help for some businesses.
Yeah, and if we think about the total number, he said £407 billion has been and will be spent in COVID support. And what would that kind of missing chunk equate to in terms of a percentage of the whole? And it just seems it's frustrating.
Indeed. And Jenny, how about you? Lots of announcements there around kind of rate changes that are coming up. So going to be keeping you and the team busy with updating the software. But what were some of the big things that you've taken away from it?
Yeah, same as what's already been said, really. I was expecting lots and lots of continued support schemes and initiatives, so I wasn't surprised by any of that. Obviously, we knew that the Chancellor had a challenge in striking the balance right, in terms of addressing the debt. So I was probably expecting more tax changes than what he actually announced. Because when you think about it, a lot of the initial stuff he announced was just about freezing things as they currently stand, which is good for me in terms of software. There's less change that side of things. But yeah, so I was probably expecting more on that side of the equation, really, I guess.
It's interesting because obviously, like we said, he's frozen a lot of rates this year, then announced a number of changes that are going to kick in from next year as well. And obviously then a commitment for those to then freeze further from until 2026 certainly on some of the tax rates. What do you think, as a panel, what do you think are some of the main takeaways that accountants are going to go talk to their clients? I mean, we're obviously practicing accountant. What are the things that you're taking away from this budget you're going to go and contact your clients straight away around?
So I think there's a real selection. So the first challenge for us is making sure that our clients understand what isn't changing. So in terms of things like the VAT freeze, the business rate announcements, which are going to be really well received. There's no doubt about that. That there were so many looming kind of dates that meant this support was going to stop. So I think that's in terms of that being the priority and sharing news on the restart grants and so on. But for us as a firm, and Steve, our firm fairly well, and what we do using technology, so the digital skills grants, talking to businesses about accessing these skills grants to invest in new technology, improving processes so we can help them drive greater profitability in their businesses. That's a great way for us to be able to support our clients to invest in the things that we can help them do. So that's quite exciting for us. And the recovery loan scheme. What I'm interested to know what the detail of the recovery loan scheme is. How does that overlay with people that have got bounce back and C-bills and so on? So the criteria is going to be interesting in that. But lots of positive things here for accountants to talk to their clients about. I've got an A4 page here of stuff that's scribbled down that is all business related stuff that we as the accountants in practice need to be communicating and sharing with clients over the coming weeks.
Yeah, and there's, like we said, plenty of announcements that will enable accountants to have those conversations with clients. I mean, crikey, if we go back, what was it, a year ago, isn't it, to when the lockdown first started, when suddenly everybody was coming to accountants reactively saying, oh my God, what do I do? It feels very much like this budget enables accountants to go out proactively to clients now to go and say, right, here's everything's been announced, here's what works already for you, and here's where you can go with that.
Yeah.
Paul, obviously, from your point of view of the positions you've held at ICAW and HMRC, what do you think will be at the forefront mind of accountants right now as they've listened to that budget, not just for their clients, but also for them as a business? Because at the end of the day, accountants are running their own businesses, right? And some have struggled, some have thrived. But what do you think that they'll be thinking from that budget? Will they be taking it away as a positive piece?
I think a lot of people like me will be thinking, I'd expected more tax announcements in there. However, there are a couple that I'm already mulling over and thinking, I want to get down into the fine detail of this. The first one is the change to corporation tax rate from April 2023. great, we've got a small companies rate back again. We've also got a taper. So, firstly, lots of fun at Iris. You'll have to change the software to get all that in. But I think I would also be thinking about all those salary versus dividend and profit extraction calculations. Isn't that going to be fun again? I'd be thinking about the loss reliefs. I mean, the Chancellor, like lots of journalists and lots of politicians, was to an extent using the words company and business interchangeably at times. So I've just, being a tax anorak, already gone into the Red Book just to check that, which only actually went live after we started broadcasting, by the way, just to check that the 2-year carryback is for unincorporated as well as companies, and it is, happily. So I think that is a really good thing to see, and I know that both CIOT and ICAEW will be delighted to see that measure, because both organizations have suggested it as a very necessary relief. We had it back in the 2008 crisis. Good to see that again. Another one that just kind of nipped through was the VAT registration limit is staying at 85k to 2024. And the last thing that I guess all four of us will be wanting to see a bit more detail on was that announcement, Help to Grow Digital. Reading from the Red Book, the government will launch a new UK-wide scheme in the autumn to help 100,000 SMEs adopting productivity-enhancing software. Now, if you go to the Help to Grow Business website, I'm hoping this might change, but the voucher is expected to be available to UK businesses that employ between 5 and 249 employees and are registered at Companies House.
Only limited companies.
What about the unincorporated? So I'm hoping that when I refresh that page, the Companies House bit will disappear. Have been trading for more than 12 months and are purchasing the discounted software for the first time. I think it's a great idea. He didn't talk about productivity as much as I'd expected, but I'm a great believer in using software to drive productivity. I'm more passionate about that than using it to drive, better information for tax compliance. I think that should be a natural output of using software for better business. The tax compliance will come with that. So I think it's a great measure, but I really want to see whether the small print there has changed in today's documentation.
Indeed, and it's always the case, isn't it? The devil's in the detail with these things, especially around that company point that you just said. What about the unincorporated? It's a really good question. I mean, even if you just take a look at the accountancy industry as a whole, right, there's a large number of accountants that are unincorporated as well, who will be looking for these sorts of things, for looking for help in their own businesses, not as alone to helping their clients. And obviously, that £5,000 each for those that they were talking about as that kind of the discounts from the productivity enhancing software could make a big difference for small unincorporated firms, right? So it's a real kind of good catch that we've got to see whether that's going to happen for them as well, because it's not just their clients at the end of the day, it's also around the accountants and how they use it. And it's an interesting one that they talk, you're right, they talk a lot about productivity enhancing software. Do we think that there's an opportunity there for accountants to use this potential that Help to Grow with their clients to help them get onto potentially MTD software and things like that we know we've got the mandates looming and coming up? Do we think that there's going to be an opportunity for accountants to help the digital records through schemes like this? I mean, Jenny, obviously you do all the MTD side of things for Iris. We've seen an increase in that side of things. Do you think this is going to spur on accountants and their clients because they can get a reduction in it?
Yeah, I think, like you said, it depends on what the detail is. When we see that detail of what the restrictions are and what's actually allowed, we'll have a better idea. But I think, personally, I think it's a really good opportunity. You've got that additional incentive to get people into that mindset and using the stuff that's available to them. So I think it's a really good opportunity potentially. I wonder if that was their thinking behind it, or if it's just a happy coincidence.
Well, the immortal 3 letters of MTD didn't get mentioned once, right? So maybe the sneaky way of getting that in there.
Well, how about you, Paul? So, Paul, did you catch the start date for the super deduction? I'm assuming that's going to be 5th of April.
I didn't see a date for that. I've put no. Okay. There is no date.
Yeah, indeed. They pushed it as the biggest tax cut in British history, but gave no dates around that. So
it's got to be, hasn't it? Because otherwise, everybody's just going to hold off spending the money. So if it's an investment into kickstarting the economy and everything else, it's got to start in April, hasn't it? So it's almost people have only got to hold up 5 weeks on those kind of. I'm assuming plant and machinery type investment is what they're suggesting this is going to be for. So it's almost kind of enhanced expenditure relief on plant and machinery. So your annual investment allowance, you now get your 130% instead of your 100.
Yeah. I mean, my very scrappy notes, which I can just about read, say for the next 2 years, when businesses invest, there will be a super deduction. So that kind of implies it is, from April.
Yeah. Today, Jenny.
Well, obviously, we will get it into the software as soon as we can. It won't be there today, unfortunately.
So it's interesting because obviously we've got all of those rates. That I suppose we joked about it, Jenny, earlier, that obviously where he's frozen the rates, that kind of gives you less of a headache because the instant rates that people are going to be using are going to be correct. Things like the super deduction, I can imagine straight after this, you're going to be burrowing, straight into that red book, looking at the detail.
Actually, I've got it, Steve.
Brilliant.
You might want to, it's paragraph 2.111 on page 57 of the red book. And it says, it's worth reading, it's about 4 sentences, from 1st of April 2021 until 31st March 2023, companies investing in qualifying new plant and machinery assets will benefit from a 130% first-year capital allowance. This upfront super deduction will allow companies to cut their tax bill by up to 25p for every pound they invest. I'm kind of struggling to reconcile that with the example that the Chancellor gave, but again, that's probably down to not being able to read my scribble very accurately. Investing companies will also benefit from a 50% first-year allowance for qualifying special rate, including long-life assets. I think that the word I really latch onto there, though, is companies.
Yeah, definitely. Not businesses, like you were saying earlier, the interchangeable words. Bit of a worry then that they're not looking at the incorporated. So to Will's point, backing up what we were saying earlier, those small businesses, what's going on there? Feels very much like the very low end for self-employment. Seems to be that there's a lot of things there. Higher end for the corporation tax and things like that. But the middle trunk, probably, I suppose, what we lovingly describe as the backbone of Britain, right? Those small businesses don't seem to be getting as much help out of this budget as maybe most people would have thought.
No, it's almost
again. I'm hoping there's more in the small print.
Yeah, sorry, Will. It's almost this thing again about what a government want. Do they want people to be limited companies, or do they want people to be unincorporated? We're seeing it with the tax measures. I mean, interestingly, some of the things we didn't see is we didn't see any mention of increasing NI on sole traders, which is something that was muted as something that might happen. There's still the argument that government don't like people using dividend as remuneration policy, and that's why they're still ignoring the 2 million owner managed limited companies. So it's on the other hand, here they're saying we're going to give all of this available to limited companies. So it's kind of confusing, isn't it, and conflicting almost.
Definitely. And I suppose some of the things, like they said, the no raising of kind of income tax, corporation tax all this year, national insurance and stuff all staying the same. Like you said, Will, some of those things that they've muted beforehand. I know we were talking about kind of what your predictions, what are the things that we've all read already. None of those have come to fruition. What I thought was interesting, and I made a note of this, and just obviously with my accountancy hat on, was the very quick reference to the fact that HMRC will have a new task force created for tax investigations to combat fraud. That the cynic in me could say, well, surely that was the whole intention of MTD, right? The whole going down the digital records was to close the tax gap, to reduce the amount of fraud and human error. Do we think that this new task force is to bolster some of that, maybe, or do we think it's got an alternative purpose?
I think it's probably COVID related, isn't it? I think it's to do with the furlough schemes and everything else. I think that's the focus of that new task force, more so than some of the other things that it could be looking at. Sorry.
Yeah,
I think you're right.
Yeah, because there are more support schemes, I guess there is more opportunity for fraud and things like that. So they have to cover it, don't they? Makes sense.
And I suppose in some regards, that's the difference between someone going and doing all of these support schemes themselves and going through an accountant, right? The accountant will be there to make sure that it's done right, as well as that there's no fraudulent activity being done. Obviously, down to an individual, then how do they go and do it? But we can see, potentially there's an opportunity there for HMRC with that task force to close down on some of those. I can't remember the statistics, but there were quite a few in the papers recently around how many firms have kind of been bending the rules, I think is the description given around the furlough scheme. So interesting that they've decided to extend that as well. Whilst we've got a roadmap out of lockdown, furlough's been extended to, what was it, September, I think was mentioned, right?
Yeah.
So, how do we see that? Do we think that that's going to help businesses going forwards for the next kind of few months?
I think it's got to help. Is it prolonging the inevitable? I think that we've seen that economies dropped by 10% or shrunk by 10%, and they're forecasting 4% growth. So there's still a hole. We're still going to be in a hole. So is that going to be enough, and is it just prolonging the inevitability? I mean, clearly it's absolutely right. I think that what they're doing and doing everything they can to give businesses the opportunity to start getting back up and running, and obviously the employer contribution kicking in from July is kind of gradually easing the pain for the employer. So hopefully it's going to work. I mean, I think the really interesting thing is the self-employment grant again, in terms of the 30%. So has your revenue dropped more than 30%, in which case you get 80%, and if it's dropped less than 30%, you've got this problem again. What if it's fallen 29%? And that kind of 2%, wherever the cutoff is a difference between an 80% grant and a 30% grant. That's quite significant.
It's going to make a lot of difference for a lot of businesses, right? We're looking at that threshold. It was interesting as well that the Chancellor obviously provided guidance around the fact that those people that filed their tax return by the extended deadline last night will be able to receive the 4th and 5th grants, obviously on condition of the trading profits. But there's been a lot of talk around the uncertainty of what happens if you file the tax return in this extended period compared to doing it to the original deadline. Do we think that accountants will be happy with that now that there's a confirmation that they're not going to be kind of like that their clients are not going to have been penalized for filing in the extended period?
The horse has bolted. Yeah, I was going to say that was always a difficult one. It was what do you ask for? Do you ask? There was a lot of debate going on a month or so ago. What do you ask? Or 8 weeks ago, what do you ask for? Do you ask for an extension of the time limit? So the clients who always leave it until the 31st will now leave it until the 28th of February. Or do you say, look, we still want the time limit where it is, but can you please have a soft touch with penalties and other things? I think HMRC called it right by saying the deadline stays the deadline, but the penalties, let's just make each other's lives easier, and we won't charge the penalties, and you don't have to waste lots of time appealing them. And even worse, dealing with the angry client on the phone saying, why have I got a penalty? You told me I wouldn't get one. I think they got to the pragmatic point, but it's nice to see some of the loose ends being tidied up now. Interestingly, on the money for HMRC, there's a general investment of 180 million for 21-22, including investing in IT systems to enable taxpayers to more easily access tax services and update customer accounts digitally, and make collection of tax and payments to taxpayers easier. I think there's some learning from COVID going on there. The way they designed the CJRS system in very short order last year, with lots of people saying, "Oh, it's going to fall over, and it didn't.
Yeah.
But the important thing for me was it made, I think, all of us, HMRC included, stop and think, hang on, information or digital technology could be a two-way flow. There could be a case for it not just being a way of sucking data out of businesses and individuals into HMRC. There could be a time when government wants that to flow back. And I think some of this investment is very much about building on what was learned then. And I think that's absolutely the right thing to do. Again, it's kind of making technology work in a way that everybody can see, not just in a way that makes it look like it's government wanting information via technology. I think that goes back to the software discounts as well. The more we can encourage businesses and agents and individuals to see software as something that can make life easier and can make a business more efficient, MTD is a much easier sell because it's a byproduct, and that's what it should be.
And you said about the government taking learnings from over the kind of like the COVID period. I think we can all take that as we've seen this dramatic shift to digital over the last year. Maybe from a point of view of people have had to, and I think that the budget does reflect that kind of almost change in stance towards digital, like you said, with the discounts towards software, but also around the government's pledge to drive forward with some of those areas. So lots that was announced. Obviously, we've got more publications of data and documents that are coming out. Obviously, the Red Book's available now. But let's just cast our eyes forwards a couple of weeks. So the 23rd of March, lovingly dubbed as Tax Day. What do we think could get announced on the 23rd of March? Maybe things that were missing in the budget? Jenny, you and me have talked a few times around kind of MTD, but other bits. What do you think is going to come up on the 23rd?
For me, I'm thinking. Well, I'm hoping that there'll be some more detail around some of these things if it's not already publicised. Specifically around the things we've already talked about in terms of limits and start dates and all the rest of it. Like the guy said earlier, when they said taper relief, I cringed. The tapering of corporation tax fills me with dread. But sort of more information around those areas. I'm not completely surprised that we didn't hear anything about MTD. I think the Chancellor probably had a lot to cover already, didn't he? I doubt very much there'd be any more on the 23rd of March. I think he's probably got an awful lot more to already focus on. So I'm not expecting anything more around MTD, I don't think.
How about you, Paul? What do you think you'll see maybe on the 23rd?
Well, I think it might be the dogs that didn't bark in the night. The Chancellor had his hands tied behind his back with the lock on VAT, income tax, national insurance rates. Those three taxes together produce 2/3 of the total tax take. Corporation tax, it is a fraction of that. It's only, I think, about 7 or 8% of the tax take. So even increasing that to 25% won't do the job. What I didn't hear today, but I did hear in the Treasury Committee report on Monday, was more talk about, or as much talk as I'd expected, about levelling up that difference between employee, self-employed, and someone operating through a company. I had expected to hear more about that today. We didn't. I suspect that some of the announcements on the 23rd of March may be used to raise some of those other things. The Chancellor said, I am going to be honest with the British people. I think he really means that, but maybe some of that honesty is coming at the end of March rather than the beginning. And who can blame him?
Yeah.
What he has to do is drive the economy. You mentioned unemployment. We're now forecasting 6.5% as against a previous forecast of 11.9.
Yeah.
Now, part of that is due to the government support measures. That had to be his main focus today, but I don't think he pulled his punches. He told us that we've got to pay for this somehow. The corporation tax bit won't do it alone. There's got to be more to come.
So potentially under his banner of what he was saying earlier about whatever it takes, maybe we'll see more of that on the 23rd of March. And how about you, Will? What was the one thing that you think you'll see 23rd of March coming up?
Yeah, I think I'd echo what Paul said. I was expecting much more about all of the work that Office of Tax Simplification have been looking at in terms of standardising. I don't think it's the right thing to do, by the way. I think that there has to be some benefit and perks for people to take the risk of being entrepreneurial and starting business, and the tax regime has always been one of those incentives. But I think it's going to happen. Unfortunately, I was surprised not to see anything on CGT. I really expected to see some changes around the CGT, but we didn't see that. So whether that's something that wouldn't be announced in the main speech and included on the 23rd of March, I don't know. It's the kind of thing I would have expected to have seen in the speech today. And equally, MTD, if they're going to say anything about MTD, it's going to be later. But it's on track. We've got to think about it. And there's a comment that we've had come in around the freezing of allowances, and quite rightly, as soon as inflation kind of starts to kind of pick up, that's effectively like a tax increase, isn't it? More people pushed into the basic rate band, more people pushed into high rate bands. So there is going to be something there. But the manifesto said we're not going to increase NI, VAT, income tax. So hands are tied by what they've pledged in the manifesto.
Yeah, very true. Well, look, Will, Paul, Jenny, thank you very much for your time. A fascinating budget, some great discussions around some of the areas that we've seen and the areas that we haven't seen. I'm sure our audience would give you a round of applause if they were here with us in person. Thank you very much. And just as a quick close on that, I mean, the budget itself has been full of kind of twists and turns for things that we've seen, things that we haven't seen. Economy has shrunk by the largest in nearly 200 years. The fact that borrowing is up, but the Chancellor has announced a number of new grants and a number of new schemes to try and help businesses. And right now, as Will, Paul and Jenny have all stated, accountants can be very proactive by advising their clients around the announcements that come off the back of the budget and what does it mean for them, whether it be a case of it's still the same as where it was going, or here's some new things to help. So I hope that you'll be out there speaking to your clients right now. I know that me and Jenny are going to go bury our heads now into the Red Book and find out the details to get your software up to date as soon as possible. But thank you on behalf of all our panelists, and we'll see you soon.